So SoFi Technologies, in the last week we have seen quite the downtrend in this stock, with us being down approximately 20% from its peak a couple weeks ago, and I don't think this is currently well deserved. We are now below the 50-day moving average, which is quite the bearish indicator, and on the MACD indicator we are now opening a short position. Despite this, I am still incredibly bullish on SoFi. I think this stock is going to do extremely well for the remainder of 2025, and I'll get round to exactly why I think that later on in this video. So what are the analysts currently saying around SoFi? Well, currently, based off of 19 analysts, they have actually priced SoFi in at a current hold, with a price target being set at the high of $20 and the low of $5. I think this is quite harsh for SoFi stock. And it only gets worse for SoFi, with 4 analysts putting this at a strong buy, 1 at a buy, 8 at a hold, and 3 and 3 at sell and strong sell. But despite this, on their earnings report released for fourth quarter fiscal year 2024, they actually beat estimates quite significantly. Within the last 4 quarters for SoFi, we have seen surprise rates all the way from 638 to the recent one of 36 and 15 in Q3. So it is clear that SoFi continues to beat analysts' expectations. So why are we seeing this downtrend at the moment? When we take a deeper look into their earnings report, we can just see further positive news for SoFi, with the total revenue having a change of 26% year over year, with member and product ads in Q4 reaching 785,000 and 1.1 million respectively. These both set new quarterly records. Obviously, SoFi is quite the pinnacle of banking at the moment. It's kind of showing the old tech banks how to do it. Basically, it's proving that the new kid on the block can be just as successful, if not more, in the future. And I think that the old banks are starting to become a bit worried about SoFi's presence now. Furthermore, their membership and product growth is consistently growing quarter over quarter. Furthermore, one thing in which could boost SoFi's public appearance is Anthony Noto, their CEO. Anthony Noto is taking quite a public stance, as he now has an X, or previously known as Twitter, profile with 83.3 thousand followers. So he could be trying to do something similar to Nvidia's CEO Jensen, or Tesla's CEO Elon Musk, of course. As a public-facing figure definitely helps a brand, because there is no such thing as bad press, only good press in the world of business. So when he does make tweets, it will always remind his 83,000 followers about SoFi's presence, and of course this will get boosted into a wider audience, further notably adding to their presence. So what are the financial statements looking like for SoFi? This doesn't take into account the recent Q4, but we can see Q3 and beyond from this. So looking at a liquidity ratio here, we can see their liquidity ratio is not ideal, with their total cash being below their total debt. This could definitely be deterring investors at the moment, and along with free cash flow, which we will be getting into. A lot of big investment bankers like to see a positive liquidity ratio, as it affirms that the company is in stable growth. Furthermore, looking at the retention rate here, we can see that they are doing relatively well for a company in which was listed in 2021. So not very, I mean, this could be better, of course, but it's not exactly something in which I can critique too much, with in this quarter here them having a retention rate of 15%, and obviously they are in profit, which is a massive thing for a company that was founded in 2021. And now looking at the free cash flow here, we can see that we are steadily, I want to say somewhat increasing, but we're really not. It's quite volatile, and the trend lines here are actually projecting this to only decrease over time, with the difference being approximately negative 45,000. So this is definitely where SoFi is missing the fuel for the fire, as a lot of investments see this, along with the liquidity ratio, as a bit of a risk, as their free cash flow is down at the moment. So this could definitely be a reason for the stock price to be taking a bit of a fall at the moment. However, I'm not entirely sure how long this fall will last for. Let's have a look at the exponential charts here to help us gain somewhat of an idea. So looking here, we have an exponential chart for a 365-day basis, and we can see that volume is relatively stable whilst the price has obviously increased. We are seeing that we are just above the 365-day trend line here, and of course we're relatively on volume. I would prefer to see this volume increasing with price, so it's not looking particularly great on the chart basis 365. If we look on a 91-day chart here, we can see that we are relatively on the trend lines, and we are actually seeing volume decrease, which is a bit of a bearish scenario. If this continues whilst the price rises, then the rally may not have a lot of support, which of course could lead to this recent pullback. So looking here on this little chart, in which I found on Google and I quite liked, we can see that essentially we could be in this complacency era in SoFi. I do hope not. I do think that this stock still has room to grow, as I will get onto in the intrinsic value analysis. But just by looking at the little chart on where it's going, it looks to be following this pattern right now, with us being in complacency, and then we're going to head into anxiety, denial, panic, and so on and so forth. So some of the quick figures for SoFi is a PE ratio of 84, a 52-week high of 18 and a low of 6, this being a difference of 12, a beta rate of 1.79, and the price of course being set at 14.91. So now looking at the intrinsic value, I see you guys that have all skipped here. Don't think you've gone unnoticed. So on this Graham's formula here, we have a growth rate plus the surprise rate, which is the mean of the recent 4 quarters surprise of 249, which is quite unrealistic. But for this, we will go with this surprise rate. I will, however, change that after we've just done this little section. But we are priced in at a solid buy all rounds should the mean of that surprise rate continue to provide future growth, which I don't think is sustainable. But we have the current price at 14, the intrinsic value at 177, sorry, with a margin of safety of 25%. That gives you a acceptable buy price at 133. On the right, more bearish formula, we have an acceptable buy price of 67, with the intrinsic value being set at $89. This obviously being way above where we currently are at 14.91. If we go in between the two of these, we get the mean intrinsic value at 113 and the acceptable buy price at 100. So now if we just remove this surprise rate and assume that analysts are going to be absolutely spot on with the growth for this stock in the future, what can we expect to see? Very quickly, if you're wondering where I've got this figure for estimated growth, it is here on Yahoo Finance. They have a growth estimate of 86.73%. So if we do hop over back to my system here, we can see that minus the surprise rate, we are still all green on a buy for intrinsic growth. So intrinsic value on the left is $63 with an acceptable buy price at 47, and if we look to the right, we have an intrinsic value at $32 and an acceptable buy price at 24. And if we're going to find the mean of this, the acceptable buy price is at 36 whilst the intrinsic value is at 48. And that is assuming there is no surprise with their future growth. This is just assuming the analysts get it bang on, which I think rarely happens. They always seem to underdo it. But even then, this is still showing that SoFi is extremely undervalued at the moment. To somewhat further back this up, we have Peter Lynch's value, which is obviously quite a bearish formula. Obviously, SoFi don't pay a dividend yield at the moment, but with their PE ratio and future growth, we can see a result of 1.02, which says this stock is fairly valued currently. Of course, if this formula says it's fairly valued, I often tend to say it's undervalued, and vice versa. I basically one up it every time, depending on how low the number is. Unfortunately, due to the lack of free cash flow SoFi has, I'm unable to deduce a free cash flow, discounted free cash flow analysis, but hopefully in the next couple of quarters, that will be something in which is doable. So that sums up my technical analysis on SoFi. I just want to quickly show you this chart again to quickly say where exactly we can expect this to go in the next couple of weeks. And I really don't know, to be perfectly honest. Of course, we are in a short position on the 1-day chart. If we look on a 15-minute chart, we can see that we are consistently falling and it doesn't look to be slowing down at any point. Furthermore, we are currently in a long position. However, it looks to be as if when this week starts, it will open up into a short position. So there is currently obviously a lot of hype around SoFi, and I do think it is justified with just a lone intrinsic growth. I think this company should continue to grow despite analysts being quite bearish on this stock for whatever reason they can provide. But I think if you are in a SoFi position, it's definitely something to hold on to. And if you are looking to buy in, I think this could be a good time to buy. However, with that being said, I do think we are going to see a bit more selling pressure in the next couple of weeks to months. I hope I'm wrong. I do personally hold SoFi stock, so I'm trying not to be biased. Of course, I started this video off by showing you the analysts' thoughts on this. I don't like to be biased at all. In fact, I actually hate how YouTubers will just choose a stock, run with it, be a bull on it, and just say absolute BS essentially. Like they'll look at tweets and be like, oh, this guy said this, and it doesn't matter because who's this guy? It doesn't matter. I mean, who am I at the end of the day? So back to the video. Basically, I think that SoFi is a brilliant stock, and if you are holding it, you should continue to hold it. Obviously, this doesn't look too good on my screen right now. We're well below all of the trend lines on a 15-minute chart. So I think we are going to see a bit of a selling pressure, similar to AMD, actually. I think we, maybe not, I don't think it'll go as far as this, but in AMD, we are below all the trend lines, and it is just falling consistently for the last, well, couple of months, really, and it's not something in which you should be buying into. But it is a good stock. Getting back to the point at hand, it's a very good stock, SoFi. If you are looking to hold it, it might be a good time to buy, but I would wait for some sort of resistance or a breakout. So that's going to conclude this video. I hope you have found it somewhat useful or enjoyed, and I will see you for the next one.